Good evening, folks. Welcome to Top Gun Stock Trading.com. This video is for Thursday, January 16th, 2014, and I'm Chief Market Analyst Wade Blizzard. All right, folks, let's get right into it. Looking at the spiders here, as usual, we went down 24 cents on the spiders, the ETF for the S&P 500. Kind of a pause day to day. Big thing I like to note today is the pause day, slight down day, and the exceptionally low volume. Only 72 million shares traded hands today. Very, very low volume. I also like to note, if we go to a 10-minute chart, we look at this the last candle of the day, the last 10 minutes of the day produced about 5 million shares traded in the last 10 minutes. That is exceptionally large volume, and the spiders got back half of their losses, over half of their losses on that last 10 minutes. So 8 to 9% of the trading volume was in the last 10 minutes, and it got back half of its losses. This just shows you the Fed's invisible hand in this market, that they're trying to keep this market propped up for as long as they can, trying to keep this game going. I'm not buying this rally the last 2 days. Like I said before, I'm going to see weakness this weekend into the next, and that's what I'm still expecting. You can even see, even on the 10-minute chart, you see a bearish pattern setting up here with a move down, a gap down this morning, sideways consolidation. That's classic bear flag action there. So we'll see, at least in the near term. Again, I'm on a 10-minute chart, so my guess is tomorrow morning we'll either gap down or show some weakness, at least in the morning. Now for the rest of the day, I do not know, but I am showing weakness for the into next week. So we'll see what kind of day tomorrow brings. Again, we got that 3% band that's at the top of this long trend line. It goes back to 2010. I just added this 3% parallel band so we can kind of see where we're trading. We're going to come back underneath this. I guarantee it. However, how far we go down, I don't know. Again, there's some support here at about the 181.50 level. Probably see some support there, and then to be honest with you, this weekend, Friday, and then the next 4 trading days. I think Monday's not a trading day due to the holiday, so basically I have 5 trading days left in this weekend next. So I don't think it'll make that big of a move down below that 181.50, but it could. Anything's possible. Some volume could come in. News might hit. Who knows? But I'm expecting weakness in this market. One thing I'd like to show you on the weekly chart of the S&P, and I brought this up a couple times, not too often. Like I said, the only thing, I'm a simple trader. I go off the stock charts. I got the daily, the prices, the moving averages. That's really all I need. Now you'll see a lot of other traders go off all these other indicators, and to be honest with you, these are backwards-looking indicators, MACDs, relative strength indicators, stochastics, Bollinger Bands, all the other nonsense. But I do look at these stochastics, the MACD here, when we're at all-time highs in charts, and what you'll see, you'll see some divergence. Now this is slight divergence in the weekly. In other words, from this peak to over here is basically straight across. Yet the stock moved upwards pretty significantly. If we look on the daily chart, now the daily chart's not as strong as an indicator, but you'll see. Let me get my scale here right. You'll see back here the market's making, again, at the time this was an all-time high in the market right here back in October. So you see the peak in the stochastics. So as the market price moves up, this thing has significantly moved down. I'll just draw it in there just to illustrate what I'm talking about here. This peak significantly moved down to this peak, and you see the angle of the stock market's going up. That is divergence. That's what they call divergence in the price of the equity. Now it's on the daily pretty significantly. On the weekly, it's not as strong yet, and that divergence is an indication of these institutions distributing their shares here at the top. That's a sign of distribution in the market. Taking a look at the IWM. Now the IWM is the Russell 2000 ETF, and these are the small business of America. Obviously, they're large enough to have their own stocks, but these are the small businesses, the small caps of the Russell 2000. And as you can see here, likewise, you see these peaks here basically straight across in the Russell, and then in the daily chart you'll see some divergence there, pretty significant divergence in the Russell as well. And when the Russell goes down, Russell's a leading indicator. When the Russell starts to go down, starts to get weak, that's the leading indicator of the market. The overall market will be about to decrease. Now here you see this divergence, this downward sloping trend line. If I drop peak to peak, and up here is an upward sloping trend line. So significant divergence in the Russell as well. And why I say the Russell is a leading indicator, because that's big money taking money out of the small caps, the more riskier assets, if you will, and putting it into more stable assets. Maybe they're going to bonds, maybe they're going to treasuries, who knows, but they're taking it out of the riskier assets, the small businesses, the equities that have the most chance for growth or big growth in the future. They're taking it out of there, but then other more stable assets. So another indication why I think this market is on its final throes, if you will. And you know, when you see if you're a hunter or you see an animal in the final throes of life, you see it twitching and moving around radically, and I think that's where this market is. Obviously, the time span is a little different with this market than is an animal, but you have to take it all into perspective. Like I said, I expect significant weakness in the middle of March to take this market down a little bit further than what it is today. But we'll see how that plays out. I'm not in predictions, I'm just in to read the charts, and this is what the charts are telling me, and some other indicators that I use for market market direction. Let's go on to USO, not to spend too much time on that. USO is pretty much a pause day. Nothing really going on here. Again, we'll see significant resistance at this bow tie here. Can it get through there? I don't know. If it consolidates right below it, it can certainly build up pressure to get through that those two moving averages. I don't see a trade on the USO until at least 35 50-ish level. When you get up to the 200 and the 100 moving average, as well as some gap fill areas up here at the top and some peaks. So 35.50 is the first place I'll be looking to short this, and again, I'll wait to see where it comes into that price to I'll pull the trigger on that. Taking a look at gold, I mentioned yesterday, I think the bottom in gold is in at least for 2014, and that might be for maybe even a longer term. Again, I'm going to write an article on this, why I think this is, and give you some factors of why I think this is. But you can see my line drawn in here, 114.91 on the gold GLD, the ETF thing. And I can tell you, obviously I can't prove this, but you'll have to take my word for it. I've had this line drawn in here since last May. When it hit that price, it bounced and it's coming back down. To be honest, I was expecting a little bit of a lower low. We did get a lower low by like 4 cents, but to be honest with you, I was expecting a little bit more than a lower low, maybe even come down to this $100 level. But it didn't get there. It got some pretty significant bounce there. But I think the near-term bottom in gold is in, and possibly a bottom for at least 2014, and maybe even beyond that. Okay, and I'll be writing a little article on that and publishing that on the internet there. Apple. I put out on the Facebook page, you're looking at 561.28 or something like that on Apple to try to get a short off. This is the weekly chart, so we'll go to the daily chart here. It didn't get there, so no big deal. Hey, if this consolidates above this 20, some bullish consolidation. Every move we talked about for bullish consolidation, solid up move, slight down, sideways consolidation, this thing will pop up there. So give this thing a couple more days. Again, there's a timing factor that may be involved into this, so Apple maybe next week sometime, middle of next week, towards the end of next week would be a good time to go long Apple. Again, as we get closer to that, I'll refine my entry price before we get into that, and I'll put that on a Fox 3 alert if you're interested in taking that trade with me. But again, that needs a little bit more time to bake in there. Talked about dry ships. I looked on the Fox 3 alerts. I didn't see this. I thought I had put this on there. I didn't. Anyway, neither here nor there. Dry ships today down a penny. It did gap up higher and got pushed down a little. Hey, I got a resistance line here at 396. Oh, by the way, that was the low of the day. So it got above that. and then back tested it. This high here was $4, so I expect this thing to consolidate above this now support line and then build up pressure to go higher. We'll see how it goes. I now have a break-even stop on this trade, so this is going to be my technique only. My break-evens include the cost of commission as well as a dinner for my family. So that's just my rule. If I'm going to put a break-even stop, I'm going to get something out of it. So that's my rule on the break-even. That's what I mean by break-even stops there. Let's move on to CNDO, another stock I get into. I believe yesterday I put out this on Facebook page as well as the traders forum on the website there. I got into this at I believe 268. You're gonna have to check the form. I can't remember the exact penny. I think this is awesome, prime time to pop here, go higher. There is not much resistance here until the earliest resistance I see is 392. We can take a look, take a bigger look at it, scan out. Yeah, the 390 level looks to be the first resistance there for that equity. So it's not a new, it's not an old equity, but it's only a couple years old, so I don't have much data back to that point. So best I can do now is the 399 level, and that weekly chart sure does look good. That bull, perfect bull flag shaping up on the weekly chart. So this may need a couple more weeks to bake. I don't know. The daily chart looks beautiful there, where it pops up and then sideways consolidation. We'll see how that goes. KMX trade, I was long this, and 2 days ago I got out because I didn't like the pattern. Last 3 or 4 videos I've been telling you I don't like this pattern because it looks like it's setting up to go lower. Well, 2 days ago I got it at 45.80ish, 75 maybe 45.75, somewhere around that area. Yesterday it went down pretty significantly, and today it was selling off pretty good. It got as low as 43.90 before it bounced back to that and trying to hold on to that trend line. So that back tested that trend line, it's trying to hold on. I think this stock has lower to go in the future. Amazon I'm looking at as well. To short, I don't have a short off on this. I like this setup in the future. I like this down move and then the sideways consolidation up. This needs a couple more days to bake in the oven here, and I'll be looking to get off a short on Amazon sometime next week as I refine that level. It's going to be definitely above 400. I'm thinking this high right here, 403.76, somewhere on the 404, 405 level, I think is a good entry price for this thing to go down. You can see it pops up above this 20, trying to hang on, and it always closes. It's been closing below that 20 the last couple days. You can see this one's probably right on there. All right. Hey, we talked about Intel yesterday, and it said the topping tail would be it's a good indication of a short. Intel just had earnings. I think it was yesterday. Might have been today. I don't remember. But I said, hey, this topping tail with volume, a little bit of volume is a good indication of future downside selling pressure. And today it did close lower by only 13 cents, but at some time during the day it was down to 26.33, so another 20 some odd cents, another 0.5% or so. So at one point in time it was down a full 1%. And again, I still think that Intel has lower to go. We'll see how that thing reacts. FDX, FedEx, this one's coming down to the wire here. Again, we haven't closed above that 143, so I'm still in that trade. I said last night that this would be down today. It was down slightly, 74 cents, a 0.5%. It was down as low as 140.95, so almost another dollar lower. I still think tomorrow this thing's going to be down. We'll see how it reacts. Basically, tomorrow's the last day for the bear call spread I have. It expires tomorrow, so right now I'm even Steven on it. And we'll see how it plays out. But I'm looking for that thing to go down. The pattern is certainly there for it to go down. Bank of America down 7 cents today. This is another in spirit of topping tail. Well, not in spirit of topping tail, but pretty close to a topping tail. It closed a little lower. I think this thing goes down lower again. The first sort of support is a 1675 region where it has some support. We'll see if it can't break through that thing and continue on down, but we'll see how it plays out. Right now, I'm short Bank of America. I think I'm 5 cents out of them, maybe 8 cents out of the money. All right. I think that about wraps it up, folks. Again, I'm still not buying this market hype. I think it's up on hot air, light volume up, no conviction. It's got some divergence going on. We're at the top of the band here. We're coming into that cycle level, that minor cycle date or cycle time this week and next week is going to say I have weakness there. So all things are pointing down for this market. I think the riskier trade is to be long this market. The no-brainer will be short. So I positioned myself into lots of shorts here. Well, not lots, but a significant percentage of my portfolio is short this market. We'll see how it plays out tomorrow and next week. All right, folks, with that, I'm out. See you on the charts tomorrow.